Hey guys, quick video here for you. If you've made a lot of money with GME, Gamestop, or even lost money, more if you're new to the market because of all this news going on, welcome. The learning curve for stock market related stuff is immense. If you've made money here or there, it doesn't last. You lose money in the market. That happens. You can be successful, but most people aren't. So if you've made money and think, oh, I figured it out, don't get too confident, because if you don't know why you made that money and you can't repeat it, then you won't repeat it and you will start to lose money. So the best way that I hedge against my losses is I set up a long-term account, and I've kind of been replying to some of your comments on this. But this is the best thing to do. It's not cool. It's not sexy. It's not like quick money, like Lambos and crazy YOLO plays. It's like the opposite of what GameStop's doing. But what GameStop is doing that could be good is bringing new retail investors and traders into the market. But they need to come in and kind of do the opposite of what brought them to here, of just YOLOing on GameStop. So what I do, is this is how I hedge. This is my long-term account. It goes up, it goes down. Don't even need to look at it. I just buy stocks that I like, buy stocks that I think will be here in 10 years, and buy stocks that I more or less use. I don't use all of these, but I try and get ones. If you have all those criteria, then it's good. Then you buy them at a pretty good price and you just hold them. You don't sell them. You don't get scared and This might be hard to think about or to do, especially if you're younger than maybe 25 or even 20, and you're like, oh, I don't want to do this. Trust me, if you're doing this and you're in your early 20s or younger or even late 20s, it's never too late to start. Warren Buffett says the best time to buy stock is right now. So time in the market, not trying to time the market, is how you will build long-term wealth. This account hasn't gone very long, but I've developed different strategies and different ways to do things at different times. This doesn't represent it fully. Really, when I turn this into a long-term account, you'll see it's right here. This is when I turn it into a long-term account. All here, I was kind of trading, buying, swing trading, options, this, that, didn't know what I was doing. It literally is like right about here. I picked stocks that I liked, the ones I believed in. Sometimes I was paying too much for the stuff. Sometimes I was getting at good prices. But the point is, you hold it. You hold it unless something fundamentally changes about a company where I don't agree with it anymore. That's the only time I'll sell it. So what we have, and so for me, it was like, okay, I like Tesla. I've always liked Tesla for years and years and years. When Tesla was $80 pre-split, which now is equivalent of like $5 a share, I thought that's way overpriced. I wasn't in the market at that point. So it took a lot for me to say, okay, I want to buy Tesla now. And that was at $386 post-split. That's after I've already traded Tesla, $386 pre-split. I'd bought shares at $386 pre-split. $1 or $386 on Tesla then would have been like $3,000 now, $4,000. I don't even know. But anyways, the point is I bought, and I'm like, I'm just gonna hold it and try this, try it out, see how it works. It works. So I have one account for the long term and other accounts to trade, try and make money in, and then you just feed your long term with it. So pick your long-term stocks however you want. Some of these I won't keep in here. This was YOLO. This I'd probably sell out of. But for the most part, these are ones I believe in for the long term. Corsair, Tesla, Rocket, Square, Verizon, IRM, AbbVie. So some of these are growth and some of these are value. There's two different types of stocks, growth and value. Value are slow movers, ones that aren't cool. Coca-Cola, AT&T, Verizon. Those ones in here, Home Depot. Oftentimes they'll have a dividend, but those keep this stable. Those make this more of a savings account. That's what you want this to be, like a savings account. Biggest problem Americans have with their money is they don't know how to save it. So if you can make this a savings account and do that, you will be able to win in the stock market, in my opinion. That's how I've won in the stock market, is by doing this. I've lost money in the stock market. I've blown up accounts by buying at the high, not knowing what I was doing, not buying something I believed in or actually used or knew anything about. But now this is the strategy that I've taken. So you want, any sort of ratio you want is fine. If you have a ton of just growth, which seems like that would naturally happen for younger traders and investors. You're like, oh, okay, Corsair and ACB and you know, whatever the super volatile place, GameStop for one. You're not going to put GameStop in here right now. Like that's, to me, that's especially not right now. I would wait a long time, see what their plan is. If they're going to stay a retail store and not do anything different, I wouldn't put it in my long term. But if you have a belief for it, then you can. I would wait for a pullback, a big pullback, if you're actually thinking about putting GameStop in your long term. So I'd look on the daily charts, look at the RSI, let the RSI come down, have it kind of form a pattern. But yeah, so that's my encouragement to you guys. Start small. Don't put all your money into it. Just start a little bit here, a little bit there. Buy it dips on companies you like, or companies you use, or companies you think will be here in 10 years. Preferably all three of those. But I'm still building this out. There's still stocks I've put on my watch list to add to it. These are growth, so basically quicker movers that are going to be more volatile. And then I've got dividend ones. These are more of the value stocks. So these are slower movers, typically offer dividends, but these are what keep the account more stable, so you don't have huge swings back and forth. So it's just a nice slow growth. That's my advice to you guys, new investors, new traders. All the gains in the world in GameStop, once you've turned $100 into $1,000 or $1,000 into $100,000 or $20,000 or whatever, you're going to be way more confident, and you're going to say on the next play, instead of spending 100, I'm going to spend 1,000. I'll put 1,000 on this, 1,000 on that. Okay, that worked again. Okay, and then you keep upping it, and that's a natural cause for human emotion. And then eventually you just blow up an account, and that $100 that you maybe made a bunch of money with, you're just going to give it all back. So long term is basically to not give back the gains. Don't give the money back to the casino. Don't treat it like gambling. Treat it like a savings account, like an investment. But then you can have a portion of it. At least I do. That's how I do it. I have a portion that I have more risky plays to try and make money. Try and have more risk, more reward. That's where I have the E-Trade. I have the Webull. But then I have one account. And Robinhood actually is a good brokerage for that, because just buying shares, I've not had any problems. Given there's some stocks right now you can't buy with them. So then use a Webull and set up a long term. But that's my advice. And a little GameStop recap for us. We're still kind of in this wedge pattern. It did sell off more at the close. So if you are trying to swing trade this, or do what we're doing, trying to just get this squeeze done and get it to $10,000 a share, then this maybe would have been a good buying opportunity. It could consolidate a lot tighter, even if you're thinking about it. Like, this is still a huge range. If you look at the SPY, it doesn't move 10 points in a day, hardly ever. It's very rare. It's like less than a 1% chance that it does that. 10 points would be from 250 to 260. That's just right in this range right here. So tomorrow it could even tighten more. It could keep tightening before it breaks out. I said 48 hours in the last video. Could be that, could be a little longer. But based on these trend lines, I expect it to bounce tomorrow, either after hours, pre-market, or tomorrow during trading. But I could be wrong, and then this line would basically come down, and then the thesis would change. Or it could find support down here. Lots of different scenarios that could happen. But my advice is to do the long term. You want to hold GameStop, diamond hands, that's great. Have an exit strategy, or just hold it long term and don't sell it for 10 years. That's basically it. Tax implications also: if you sell a stock within a year, you're taxed more heavy for it if it's a profit. So things to keep in mind when it comes to taxes. If you buy a stock and then hold it for a year or over a year, you're basically, your tax obligation is less on it. You're paying less taxes on it than if you sell it within a year. Then it's straight capital gains tax. I am not a financial expert. I'm not a tax professional either at all. But this is for educational purposes and just to kind of show you what I've done and what my plan is. So plan is for GameStop. I am invested in GameStop. I don't have so much on the line that I am sweating over it. I did at one point, not so much, but I just was sweating because of all the hype. I don't have so much that I'm sweating. I've got quite a bit of exposure, so if this goes good, it goes good. Got 10 shares in this account right now. I'm down $1,000 on it. No big deal. This is a very, very small portion of my amount of money. Not a problem. Got 7 shares in this one, down $470. Not a problem. See how small these percentages though are very small if you look at just even all these accounts. So use a small amount for your fun. And if you're like, oh shoot, I made this money and it's all my money, and it's like, it's not too late. You can take profits if you want. Diamond hands is cool until you get left holding the bag. I want you to have diamond hands. I want everyone to make $1 billion, but might not happen. And then you'll get burned out of the stock market, and you won't ever be able to make money with it because you'll be sour. That happened to me for years and years and years. And then I finally came back. So here we are. That's my exposure to GameStop. I've got this debit spread too. So basically upside on this one is a maximum profit of almost $4,000 and then a max loss of $1,000. We'll see what happens with this. Basically GameStop has to close above 410 by Friday, and then I'll be able to get the max profit. If it closes below, closes down here, I'll be at max loss, basically 401. So these are options. If you guys don't know about options, that's something get into after you have very good understanding on shares. And that'll be it. I'm gonna do a daily recap video after this one, just showing what plays we did today. Thanks so much for watching, guys. Hope this isn't a downer for you. I'm on the GameStop train. I'm having fun. It's gonna be good. I'm still bullish on this. I think it's gonna. I'm hoping. I mean, this wedge it's fine. It's still bullish. If this 9 comes under the moving average, I mean, it'll be a big sell-off for this to basically turn into bearish territory for me, just according to the charts. But yeah, I'm having fun with it, and I'll see you in the next video, guys. Thanks so much for watching. Sub up, like up, comment down. Happy money sticks around. When I say happy money, I mean money that you're not playing with, money that you don't just kind of, you make it unhappy by throwing it around. Make it happy. It'll stick around. Peace out.